solution they have to your challenges. I also encourage all the participants to share your issues and your experience during the course of this session. I request Ankush to escort the speaker extremely to the stage. Thank you, Ankush. I also request Ankush to briefly introduce all the experienced panelists. Thank you.
Very good afternoon to everyone. After a lunch break, we have a very solid interactive session, and the panel is superb. As you all can see, we have a very senior chartered accountant, and plus we have a junior chartered accountant also, but young and dynamic. So I'll not take much of the time. I'll just give a quick and short introduction. I'll start with CA Vipul Choksi. Friends, I don't think Vipul Choksi sir needs any introduction. We all know he's our past chairman for the year 2002-3. So I'll just say 2 lines about him. He is a core group member of BCS, Bombay Chartered Accountant Society. And of course, he is a regular faculty at professional seminars on subjects relating to accounting and auditing, and also contributes articles in professional journals. Friend, I request you all to please welcome him with a huge round of applause. Our second panelist is a dynamic chartered accountant, CA Pankaj Tiwari. He's a director in CNK and Associate LLP. He is currently involved in the audit and assurance services, along with consultancy services like due diligence, valuation, etc. He was special invitee to corporate laws and corporate governance committee of ICAI 2023-24. Of course, he is also a regular speaker on Ind AS, Companies Act, and other topics at various forums across India and overseas. Friends, again, I request you all to please welcome him with a huge round of applause. Dhananjay sir, please excuse us. We have already introduced you, so I'll not again. And now the fourth and final panelist, our young and dynamic chartered accountant, CA Priyanka Palav. She qualified in 2021, and she is currently working as a senior manager with HDFC Bank Limited Internal Audit, Retail Asset Segment. She is also appointed as member of Board of Studies of ML Dhanukar College of Commerce for the academic year 2024-25. She has conducted various internal induction training and seminars on BFSI segment audit. Friends, again, I request you all to please welcome her with a huge round of applause. And before handing the mic to them and starting the session, okay, I think photographer is missing, so the memento we will hand over a bit later. So, sir, it's up to you. We'll start, please. Rakesh bhai, please start.
Good afternoon, everyone. We welcome you all to this seminar on and the panel discussion for discussing various issues in the banking audit. To begin with, since we have already approached the March 2025 financial year closure, the first most important and critical point that I would hand it over to the panel for discussion is how we can, look at the critical points while reporting on IFC, the internal financial controls. What are the key takeaways and key risk issues while addressing the IFC reporting?
Hello. Good afternoon, everyone. The question is on internal financial control. So basically, you all would be aware that under the Companies Act, internal financial control was made applicable from 2016, and it was made applicable for the companies incorporated under the Companies Act. So to that effect, IFC was applicable to all the private banks which were, which are incorporated under the Companies Act. But as far as public sector banks are concerned, it became applicable from March 21. So the issue or the question raised is as to how to, verify the IFC at branch level. Now, first and foremost, I don't know what is the, practice followed by all the banks, but not all the branches are covered under IFC. The large banks, they select some of the branches for internal financial control, and therefore all the branch auditors would not get IFC testing. And if at all you get the IFC testing to be done at the branch which you are auditing, then the risk control metrics would be given to you. And how to verify those risk control metrics, I would request you to refer the guidance note on IFC. So there are two, there is one guidance note on IFC which was published in 2016, and there is a technical guide on IFC to be tested in public sector bank. So I would request you to read both the guidance note and technical guide where the guidance has been given as to how you should be testing the risk control metrics at various banks. Now typically what are the processes involved in a bank branch? So one is acceptance of deposit is the main activity. Second is giving of advances. So the risk control metrics will be developed by the branch, or it is actually not developed by the branch, but by the consultant of the bank or by the senior management of the bank. They would develop the risk control metrics, and they would break the entire process. Say for example, advance, say there is a retail advance or car loan. So they would list the entire process, and those processes will have to be tested by you as auditor. And if you feel there is something missing in the process, then you could as auditor bring it down in your report. But again, if there is something which is very insignificant, then it will not find place in your report. But this is how actually the testing has to be done and reporting has to be done. The question also is, the constraint of time, but then there is no solution to that. You have to manage, you may have to maybe deploy additional resource to particular, do this testing, because IFC also is something, which is, I would say, is a specialized field, because not everyone in your staff would be able to, do IFC testing. So in that situation, you may have to have somebody who knows how to test IFC, and that person can be deployed and he can do IFC testing. He may not be involved in the entire bank branch audit, but he may be deployed only for this testing. So that is how, the time challenge can be addressed by the firm. So this is my view. Dhananjay and Pankaj can add to what I have said.
So I think Vipul bhai has covered it largely, what areas we should look at it. Only one point I just want to tell you all. In fact, this Monday only, there was a RBI conference for the Central Stat Auditor, wherein this IFC related issues were spoken twice, both by the ED of the RBI and the GM of the RBI. So that was in context of the Central Stat Auditor, but as you all know, the report issued by you is taken as a base by the Central Stat Auditor for reporting on the IFC at a bank level. Now coming to the, so that shows the significance and the importance of the IFC at the branches. Now, typically what happens, these RCMs are developed at a central office level. Sometimes these RCMs could be outdated. Sometimes the control which are mentioned in the RCM would have undergone a change. Some controls which are written as automated or a manual control would have got automated during the particular year. So at least practically what I have seen, sometimes, if you go and check the IFC at the branches, sometimes the branch managers are also not aware about that what is this risk control matrix all about, what are these controls which need to be validated. So I would request you, if your branch is where you need to issue the IFC report, you first discuss with the branch manager whether he is aware about these controls which are there at his branch, and then report. So this reporting need to be factual based on the evidences. And also if you find any control which is not relevant or which is outdated, which is practically not happening at the branches, I think we should be very careful in expressing our assertions on those control. We should avoid those assertions. So that's it from my side. Dhananjay, if you have anything.
I'll just add one point actually. As far as the branch auditors are concerned, typically the central auditor will have certain aspects to be covered by the branch auditors at the branch level. So it's more of a ready-made questionnaire format actually which is made available, which is a part of a larger canvas which central auditors looks at. So when you're doing at the branch level, the IFC testing actually, it's very confined to the limited questionnaire which is there applicable at the branch. So it has to be more on a factual basis and more on the basis of the audit evidence which you might have gathered or the experience which you might have gathered. In case if you feel like something is left out during your regular process, then you are expected to ensure that that limited component actually has to be tested by you over and above what you have carried out at the branch level. Largely actually, if you ask me, the IFC testing which is there at the branch level, once you understand the overall working style of that particular branch, it's not that difficult to answer that. As far as central auditor is concerned, the challenges are altogether different because he may not be able to reach to that ground level. So you are kind of a helping hand for central auditors to start off from the root level. So wherever there are deviations are there or adversities are there or negative things are there, you are supposed to report that. So on your reporting basis, the central auditor will be able to really conclude as to what is the effectiveness of IFC over at the pan bank level. That's all from my side.
So advances being one of the most critical factor or aspect in the financials of any bank. Our next question is pertaining specifically to classification of advances. So I would like to ask the panelists if there is any difference of opinion with respect to how to classify an advances, and if the bank's management or the branch is not agreeing for any passage of MOC, how this kind of issue should be tackled.
See, actually, as far as MOCs are concerned, MOCs are initiated by the statutory auditor. They need not be accepted by the bank. It's up to them actually to differ from auditor's view or not. Auditor has to ensure that he is having sufficient reasoning for that MOC to be passed, especially when we are talking about advances. Whether he accepts or not, that is not an issue. Taking a worst case scenario that the bank is not ready to accept, I'm saying bank as a whole, not even a branch as a whole, the auditor can simply qualify the report and conclude the audit. You don't have to really get into litigation or arguments beyond a point, because ultimately you have to conclude the audit at a particular date. So it's more of you need to be firm about your reasoning. That reasoning should be based on RBI circulars, not on your basis. This is, you should not say that I say that the account is NPA, so the downgrade that. Except one case, that as far as inherent weakness is concerned, that is your prerogative. The bank cannot dictate that inherent weakness is there or not. That is up to you to decide. And ultimately, if they don't agree, simply qualify the report. There is nothing else which one can do. And of course, you can add.
So basically, I think I agree with Dhananjay, but some banks, they have a system of MOC where the branch manager at the end writes whether he agrees with the MOC or he doesn't agree with the MOC, yes or no. So many a times the MOC is given and the branch manager would say that I don't agree with this MOC. So if that is done, then I think the qualification may not be warranted. And again, practically speaking, generally we don't come across a situation where a branch auditor has qualified his report because of non-classification. But I think the conservative view would be, as mentioned by Dhananjay, is that if you strongly feel that an account is NPA and not classified as NPA, then you have no option but to qualify the report. Yeah. But don't leave it open. See, sometimes, typically what happens is that, in the LFAR, the branch auditor gives a very detailed report mentioning very explicitly that this account is NPA, but not classified as NPA by the branch. And his audit report is clean. So such remarks, I think, should be avoided, because you should not write, in your LFAR, this account is NPA and not classified as NPA, and then you give a clean report. So that should be avoided.
I think Vipul bhai, straight away talk the facts that sometimes if the branch manager is not agreeing with the MOC, you want to make everybody happy, you put it in the LFAR, you move forward. I think that kind of situation need to be avoided. And let's say if the branch manager is not ready to accept the MOC, what you're passing, or he's not agreed. See, there are two situations could be there. One, there's an interpretation issue. That means the branch manager is of the view that this account may not fall into IRAC norm, and that's why it should not be classified as an NPA. Another is that, okay, it's more of a judgment what you're taking. Now, in both these situations, if the branch manager is not accepting the MOC, and let's say if the branch manager required to sign off the MOC, your simple job is that prepare the MOC, attach with the report, and send to the central statutory auditor. I think it will be taken care at the either at the RO level or at a zonal level. But don't write everything what is required an account to classify as an NPA, but don't classify the account as an NPA. So, and sometime I have seen that, giving a reference in the main audit report also, please refer remarks on the asset classification in para number so and so of the LFAR. So I think that should be avoided. If you are very clear, very thorough that this account is an NPA, it should be classified as an NPA, whether the manager accepts it or doesn't accept it.
Most of the time, bank managers are saying that you put it in LFAR, you report in LFAR NPA, but don't give us MOC. So if I do that, what kind of liability I have, or what will happen?
So I'm sure, this kind of instances or this kind of situation would have come to everybody's attention. It's more if you today put it in the LFAR, and if this account gets picked up by the RBI as part of their inspection, as part of their annual inspection, what they carry out, then it is the responsibility of the branch manager to justify, or the auditor to justify why this account was not classified as an NPA. And to be very frank and fair with you, now you have to give the list of the samples also as part of the LFAR. And if this specific account is a part of the sample, and you are writing a full note on that account, not classifying this account as an NPA, it has a bigger risk involved. So straight away the liability comes on the branch auditor.
Yeah, you need to. Because if you say 10 crore of advance, and if it's substandard, and then the provision is understated, so you need to very explicitly mention. Yeah. But situation is avoidable. We are talking about qualification, but it is not so easy. So rather prevail on the branch manager and classify the account as it should be, rather than giving a qualification.
So continuing with the topic of advances, another critical and sensitive topic is priority sector lending. So our next question is, what are the key nuances, or what are the critical factors that we should bear in mind while we are verifying agricultural loans or PSL classification?
For example, in Mumbai, we see a lot of agri loans, and they are classified as a priority sector lending.
See, actually in both, whether you classify it as agricultural loan or even in normal, a priority sector lending, whether it is agri or non-agri, what one needs to see is that one has to look at it as to what is the end use of that, and based on end use that classification will happen. So there are two factors. As far as agricultural loan is concerned, naturally end use is the prime important factor. As far as other than agri or any agri non-agri priority sector lending is concerned, one is PSL guidelines are there which talk at length about which are the accounts which are qualified to be priority sector lending advances. So two factors are there. One is that whether that particular borrower is falling into the category of priority sector lending permissible borrowings or not, and second is the end use. So both are required to be matched. So it's not singularly actually. So like for example, by end use something might be a priority sector lending, But maybe that, borrower itself is large, he is out of that purview of priority sector, so it will fall out of that. So that's how one has to look at it.
Actually, in case of gold loans and unsecured or the personal loans, they tend to just obtain a declaration from the borrower that it's being utilized for education purpose or medical reason, and they classify as priority sector lending. So they, in a certification, we need to put a clause or something wherein we have relied on, or this bank has classified these assets taking in the declaration part.
No, you cannot rely on declaration actually. You have to state that there is a flaw. So you have to qualify your certificate by saying that sufficient and appropriate audit evidence was not made available to us, so we are unable to quantify as far as the correctness of priority sector lending is concerned in the certificate. So borrower has given a declaration, but there is no end use. So naturally you cannot rely on that. Declaration is, it doesn't suffice the purpose actually. See, the question is that professionally, do you feel that the declaration is sufficient and appropriate audit evidence or not? So if the answer is no, you have to qualify. If the answer is yes, you can go ahead.
So this PSL classification has been a top priority of the RBI. I'll give you very simple examples. Gold loan, I think somebody mentioned, and I think Dhananjay also referred. See, the priority sector or the whole priority sector lending, especially the agri portfolio, can be classified into a direct agri and indirect agri. The declaration, I think what you are mentioning, or the declaration which is obtained by the banks, are mainly for the indirect agri advances. In case of direct agri advances, if you're classifying any advance as a priority sector under the direct agriculture, you have to have a land record. And that land record should be the agricultural land. And especially now the RBI, the whole gold loan issue which is going on, some of the banks, in absence of the end use, have stopped the indirect agri advances. Like for example, dairy, farming, fisheries, etc. used to give many advances and call them as an indirect agri. They've stopped those advances. And in case of agriculture or in case of direct agri or priority sector, I just want to leave you one thought with that, whenever you are checking these land records, may not be in Bombay that relevant, but outskirts of Bombay, please check the land record whether they are in the name of the borrowers. Sometimes the relatives' land records are taken as a base to give the loans, and they are classified as a priority sector advances. Some banks' policy permits this kind of a thing, but whether it is really there, some distant relatives' land record is taken as a base to classify these advances as priority sector advances. And why we are only restricting to the agriculture advances? You move to education loan, you move to MSME advances. See, whenever you classify any loan as a priority sector loan, you are certifying the achievement of the bank's target in terms of the PSL guideline. So we have to be very careful whenever we call any account as a priority sector account. And like for example, we had verified in one of the banks the whole gold loan portfolio. So many inconsistencies. The person is getting a salary in his bank account, and he is shown as a, doing some dairy business also. So I think these are the things which one should be careful about. I believe this new PSL guideline which has come was supposed to address these issues. They have only addressed one issue, that if you are buying any gold loan from the banks, buying any gold loan from the NBFC, will no longer get classified as a PSL advances going forward. And of course, they have revised certain limit in the PSL guideline also. So please be, as we said, IRAC is one of the important area, advances one of the important area. PSL is also one of the most important area in today's situation when it is there, as far as the all banks are concerned.
See, I have a question on agri loan. Some banks, which I have audited, they just take a declaration from the borrower that he is using it for agricultural purposes. When we ask for 712 extract, in fact, I had asked this question yesterday to one of the speakers, that should we insist for 712 extracts? So he said, no, it's not we should not go to that extent. Now, when we ask bank about 712 extract, they say that there is an internal bank circular saying that declaration is good enough. Now, in this scenario, which I faced practically, in this scenario, should there be a qualification?
See, I think, sir, what you're saying may hold true as regards to the indirect agriculture advances. Whenever you look at the priority sector, you are giving loan for crop cultivation, etc. these are called as a direct agriculture advances. I think the loans which you are mentioning based on a declaration are the indirect agriculture advances, and that's how most banks are functioning as on today. And the RBI has been behind them that when you are classifying it, please validate the end use. Now, none of the banks today validate the end use of these indirect agriculture advances. So if you have evidence and you have a supporting not to call this advance as agriculture advance, you need to amend your certificates on the PSL category. Because when you go and qualify your audit report, it has to affect the true and fair view of the financial statement. I mean to say the balance sheet and the profit and loss account. Maximum you can go and amend your certificate, you can make your comment in the certificate on the PSL category. I think that's my view.
No, I think the question was slightly different, if I'm not wrong. You were asking a question as to whether that should classify as agriculture advance or not.
No,
right?
no. My question was they had shown it as agricultural advance.
Correct.
But the evidence that it's an agricultural advance or used for agriculture, the only evidence available was declaration given by the borrower. That was the only evidence available.
That is not sufficient.
That is not sufficient.
That is not sufficient.
So they produced a bank circular saying that our bank is saying there is a bank circular that you just take a declaration. Is that circular binding on auditor? That is my question.
No, circular is binding on bank, not on the auditor. You can take a different stand because it is not RBI circular per se. So bank can have any, see, by that logic actually, even for vehicle loan also mere declaration should suffice. See, ultimately there has to be some verification of that end use which should happen. It need not be by visiting the actual place, but maybe some entries are there routed through the account which can prove, which can substantiate that maybe it is towards say fertilizer purchase or maybe seed purchase or some kind of evidence has to be there. It cannot be merely a declaration actually, because then all loans can be agricultural loan in that particular branch. So that doesn't serve any purpose. So you can very well challenge the circular in an appropriate wording actually. Challenge in the sense not exactly to challenge, but you can say that these are the gaps which can never be surfacing.
Right, because 712 is the basic minimum requirement which he should produce, right? If it's an agricultural loan, minimum requirement documentation is 712 extract.
In fact, even that is not a real requirement. I can cultivate the land of someone else by having a proper agreement, but my activity can be agricultural. So in fact, that is also not a evidence to prove that is agriculture advance. That might be one of the evidence to prove that I am a farmer, but nothing beyond that. So I might be having a 7/12 in my name, but I take a loan for some different purpose. It need not get classified as agriculture advance. So even that is not sufficient. Actual end use has to be ascertained, and declaration is definitely not an end use confirmation.
Okay, thanks.
See, I will give a parallel example. Many times in gold loan, it is, at times it is stated that it is for business purpose. It's a very loose wording actually. The bank has to prove, not us actually. If the bank is not able to prove, you have to pass a... No, then it's not an agriculture advance. See, they have to prove, not us actually. Very true. That is the reality.
Okay, so what is the recourse available to the auditors? So I think they should get it classified to non-priority.
Yeah.
Because see, this also has got bearing on capital adequacy. Because you as auditor also have to certify the risk-weighted asset of all the advances. So if it gets classified to non-priority, then the risk weight factor would be different. So, and the second question, I think the gentleman had asked whether he should qualify the report, but I personally would take a view that if the classification is not correct, then qualification in audit report may not be warranted. A mention in the LFAR would suffice, because strictly speaking, wrong classification doesn't, in my view, affects the true and fair view of the financial statement of the bank.
But in certification, he can state that while certifying the PSL.
Yeah, certainly.
To quantify that, because that is very difficult to.
No, you need not quantify. You can disclaim.
The types of advances wherein a declaration has been taken and.
No, firstly you need to ask the bank to give a list of accounts which have been classified as priority merely on the basis of declaration. So either the bank will give you the list, which you can append and can be quantified. If they don't give, disclaim it by saying that information was not made available to you, because you are not supposed to go through each and every account. That is unwarranted. And just to add about qualification in the audit report, See, the question is that, whether it is going to affect anything related to your financial statement. Now, probably it might happen that a particular account, if it is not agriculture advance, it might turn into an NP account also, because the norms will be differently applied. So you need to take a call based on the quantum of advances which are there. And if you feel that the accounts are not agriculture advances and there is a likelihood that multiple accounts might turn into NPA because 90 days norms are breached, then naturally the entire structure of financials will be practically will hampered. Everything will change. But only thing is that when you qualify, actually you have to state reasons why you are qualifying. And if you are not able to quantify, you need to state the reason why you are not able to quantify. So qualification is, speaking, from dais to say that qualified is very easy actually. But if you really want to qualify, you need to have that kind of a stature not in that sense. Every one of us has that stature. You need to have reasoning for that. And just ensure that reasoning is documented. Send that by email to the branch manager. Seek his representation. If he doesn't represent, that is a sufficient documentation to say that, I'm going to qualify a report. So give opportunity to be heard. Ask categorical question and ask for specific information. If he is not able to provide, you are not left with any other option actually than to qualify a report. Because he should provide you the information and not other way around. Yeah.
So first aspect is that gold loans are given as an agricultural priority sector and not classified into non-priority. So that's the first part. So what about the other branches, my other colleagues? Second thing, as a concurrent auditor, what would be though it is not part of this our particular discussion, but the similar line, what the concurrent auditor will do in this?
Talking about the first part, once you convey that to the central auditor, means my suggestion is that if there is a systemic issue, like merely on the declaration all accounts are turning into a priority sector, better to send the email directly to the central auditor, plus add it in LFAR specific para. That para is there about any communication to central auditor or management of the bank, add it over there also. Send a separate communication to the central auditor and let him take care of that. Because practically you cannot, call up all the colleagues and say that, collectively we start doing, so and so activity. That is not supposed to be done.
It happens, somebody has not done.
No, I understand that. Only remedial way, measure for branch auditor is to communicate with the central auditor, let him take that call. But communication is required. As far as concurrent auditor is concerned, actually it's an easy task actually. Because every month you can simply report it and let them comply it actually.
They won't.
No, that is fine. So it will remain pending for compliance. Let it remain. Okay. See, closure of report is responsibility of the bank, not of us. So once you raise a query, validated by substantiating evidences or reasoning for that. Second part, the other part is on the bank side, not on the auditor side. It is audit is prerogative.
Thank you.
Just to dwell a little more on this topic, since we are talking about PSL, interest subvention schemes becomes one of the important factor. So what are the key points we should bear in mind, since many of the banks do face a challenge wherein the claims get rejected? So as a branch auditor and as a central auditor, what should we bear in mind when we have to certify this claims?
You as branch auditor basically, have to certify the interest subvention. So typically you will have to, verify as to what is the eligibility of the bank to get the interest reimbursement, so to say, from Reserve Bank of India. So you as branch auditor have to just certify that. Whether it is received by them or not received by them, I think would be beyond your purview as branch auditor, because the realization of subvention happens at the HO level. It really doesn't happen at the branch level. So I think, and generally there is a delay from Reserve Bank of India in reimbursing the amount to the bank, but rejection, I am not aware of many cases of rejection unless there is some, strict violation by the bank. as far as subvention is concerned. Otherwise, as far as branch auditor is concerned, I think they will have to refer the circular as per which the certification is being done and certify the number.
Only one thing in this current year, the KCC subvention, the 2%, 3% what you used to get on the crop loans, the portal of the government has changed, and so it might affect the computation in the current year basically. So whenever you are looking at the calculation of the subsidy for the current year, be mindful about the calculation. Anyway, we were never getting the backup calculation of those subsidies. So just be mindful because they have shifted from the last renewal date to financial year now. So the subsidy will be for the financial year which have been charged, the interest which we charge on a 6 months basis in the current year. So there's a little tweak in the portal in the current year. So pick up that first, whenever you go to the branch in the current year at least.
Moving on to the next question, could you throw some light on the area of inter-office reconciliation inter-branch accounts? What are the key risk areas?
See, actually, as far as inter-office and these areas are concerned, they are, frankly speaking, not in the scope of branch auditor per se. It's more of central, level control points which are there. Just to, name few of them is, typically all office accounts are there, wherein the controls are required to be established through the system. So how the system is configured is something which is more vital. That prerogative may not be there with the branch auditor because he may not be able to access those CBS control points. So as far as branch is concerned, it has a very limited ramification that you have to go through the office accounts, go through the transactions related to that. But as far as control aspect is concerned, which is, which can be created through CBS system, at branch level that won't be possible. At the same time, just think about a possibility that there might be other than office accounts also which can be used for different purposes, like parking account. So be little aware about that as to how the entries might be passed. So the best way is that when you look at the trial balance or a GL, the best way is that to go through that, just see that ledger account on the screen, see that whether there is any apparent entries are there which are not supposed to be there in that particular ledger account. Just to give you an example, I am giving a very straight example. For example, interest account is there, interest received or interest paid, on advances and deposits. Ideally, there should not be any manual entry which should be there in that particular account. But if you notice any entry, actually it means that the account is open for creation of any entry, any manual entry, which may not get caught in any normal audit. Because usually we will never go through any ledger account for interest received and paid. Be little attentive wherever it is possible. Try to extract that maybe in Excel or something and try to see that whether any odd amounts or I should say odd entries are appearing over there. But my personal view is that it has a very limited ramification as far as statutory branch auditors are concerned. It has a very large ramification for central auditors, which that is beyond doubt. But it's more of configuration of CBS system rather than anything else.
The next question is with respect to,
My question is related to the accounts which come into insolvency and bankruptcy regime, where either the companies go into insolvency, either by filing the claim by the bank, bank itself only drag into insolvency, or second thing is that the account is good with the bank. However, because of the third party action, that is the operational creditors who are challenging the NCLT, and it goes into insolvency. So wherever there are accounts which is running good in the company and insolvency has been triggered, in that case, as a branch auditor, what kind of action is needed? Because normally when it is a bank, and it is going to insolvency, it is 100% return of account. But when it is a good account which is running and operational creditors are filing and insolvency is being initiated, the claim has to be filed from bank side. So as a statutory auditor, what kind of action is required?
It's insolvency related, I think. Yeah. See, first is that as far as classification is concerned, it is based on the record of recovery. So presuming that it is otherwise running fine, then the next thing which has to be tested is if the insolvency process has started off, you need to verify that whether any likely weaknesses or inherent weakness exists in that account or not. Just because the insolvency process is triggered off, you don't have to classify that account into NPA. It entirely depends upon that particular circumstantial evidences, the reasons for triggering that insolvency, and whether you still feel that that is a going concern and whether there is any inherent weakness is likely to be there or not. Based on that, you need to take a call. There is no objective answer which one can give, because the circumstances might be altogether different. But merely by because insolvency is triggered, actually the account will not get classified as NPA.
Yeah, I think I agree with the view expressed by Dhananjay. I think that is how it should be seen.
And let's say, if you want to, more from a reporting perspective, you want to disclose also, if it is falling in that top standard advances criteria, which you have to report as part of the LFR, you might mention this fact. But anyway, that will not have any consequence on the classification and on the, on the provisioning aspect. It will continue the way it is.
Because the moment insolvency has been initiated, the claim has to be filed, whether that account is good or bad, So the moment the claim is filed, immediately, I have heard about some guidelines from the RBI also, or I am not sure about it, that 100% provisioning has to be made. So whether as an auditor we should see that or not?
I think there is no specific, mention of this in the RBI circular as such. And as Dhananjay rightly said, record of recovery is the ultimate test when you classify the account as NPA, and account is running good, then there is no reason. And honestly, I am not aware of the RBI circular which is, mentioning about this particular fact. So again, Hemant bhai, coming to your question, if there is a threat, if you as auditor strongly feel that this account will turn into NPA, then, if you have got strong grounds to argue with the bank that I strongly feel that account would turn into NPA in next couple of months, then you can definitely classify as NPA, but then you have to have a reason, not because the account is, gone to insolvency.
Sir, I'm not sure, but the moment the account is initiated as an insolvency and the claim is being filed, normally the account is transferred to same branch. That is stress asset management branch.
No, stress asset management only if the account is NPA, not otherwise. If the account is standard, then it never gets transferred to same branch.
So I think those cases are where the bank themselves has started the IBC process. There the accounts are transferred, and mainly these IBC processes are initiated once the account is classified as an NPA.
No, I have seen the accounts where even the third party as an operation creditor also has been, they have already initiated the process and the process is being initiated. Okay. The accounts are transferred to same branch as per the SBI, because I have seen the SBI's regime.
And the account is standard?
Account, I will have to check.
No, because account cannot be standard.
Yeah, it may not be.
No, SAM branch will have all NPA accounts. No standard account will get transferred. Bank on its own might have classified that as NPA. That is a different thing. Yeah. So otherwise, standard asset won't get transferred to SAM.
Okay, thank you.
Moving on to the next question, whether systematic failure of core banking system, whether that would warrant for modification in our report with respect to SC 705.
Didn't get the question. What is it?
Whether systematic failure of core banking system would warrant any modification in our audit report with respect to SC 705.
Yeah, what do you mean by failure of CBS?
With respect to NPA classification.
Classification should happen automatically, or any other error in CBS.
See, failure of automation is violation of RBI guidelines, because RBI has very clearly said that all banks NPA have to be automated. So if that be the case, again, the fundamental principle of qualification is affecting the true and fair view. So if this classification automation has failed, then you may have to verify manually, where manually the branch has classified the account correctly, that you may have to verify as auditor. But failure of CBS as far as classification is concerned may not warrant qualification. But I think Dhananjay and Pankaj also can give their view on this particular point.
See, I think failure of CBS is a very wide term. We have to narrow it down that where is the failure of CBS? The failure of the CBS could be what we have seen in the past, that interest has not been run on a particular deposit accounts. Let's say on a particular scheme, the interest has not been run, the patch has failed, and that is a failure of the CBS system. Does it have a true and fair view impact? Yes, it does have a true and fair impact. Will it warrant a mention in the audit report? It would warrant if the portfolio of a significant size. If the deposit accounts are minimum, it may not warrant a true and fair view comments. However, when it comes to CBS failure with respect to, let's say, on classification of accounts as an NPA, again, you have a whole reporting in the LFAR where you can mention where the systems have failed for classifying an account as an NPA. Now there also there could be possibility whether it's a system failure or it's a manual error which has happened in the classification. So I think we need to narrow down the failure of the CBS system, that what is the failure of the CBS system and where it has an impact, and then the consequential impact.
Chairman sir, in lighter vein, this is a theoretical question or actually you face this situation?
I will just add one point over here. See, one is, presuming that the query is about, suppose the CBS system is not working the way it should work as far as automation in IRAC norms is concerned. So if I want to qualify a report, see, the first thing is that if I want to avoid qualification, then I need to quantify that which are the additional NPAs. I need to pass a MOC. Then once the MOC is passed, naturally I don't have to qualify the report per se. I can only add, certain comments in LFR by saying that the system was not working and other things, and I have to just mention that RBI regulatory norms were not followed, because that will come in my last para, not about the true and fair view, but that regulatory compliance is para, I need to qualify that. Second thing is that if I am not able to quantify, in the sense the system is grossly failing. Just to give an example, suppose DP calculation is wrong, interest recognition is wrong, and NPA classification is also wrong. Let's presume on that part. And I'm having a substantiating evidence that it's a systemic failure. So I have some, some sample sizes or some samples or examples which prove beyond doubt that system is failing. It's not question of master data, being fed wrongly. Because master data, if it is fed wrongly, it might be some aberrations, one or two cases might be there. But if the master data is correct and the system is behaving differently than what it should have behaved, then naturally I cannot quantify for that branch as a whole as to what should be the quantum. I will not be able to quantify what is SMA 0, 1, 2, substandard, all these things. In that case, I need to cite those reasons and then only qualify the report. So the reasoning has to be very clear. I need to also extend that reasoning to say that how it is affecting true and fair view. So I need to substantiate that because of this, NPA classification won't happen. Because of that, my BDDR provision won't be there. My income recognition will go for a toss. So I need to link it that with how it is going to impact my P&L as well as balance sheet. If I just leave abruptly by saying a single comment that system-based NPA is not working, I will not be able to substantiate that why I am qualifying the report. So I need to qualify in such a way that the reader of the report should understand that how it is affecting true and fair view. So somewhere in P&L balance sheet, it should have a ramification, and that too not quantifiable by me. Because if I am able to quantify, I have to pass a MOC. Then I cannot, simply qualify the report. So all these things, if I prove beyond a point, one can easily qualify the report. And just additional thing, if this is the reason, why you are qualifying the report, send an additional communication to the central auditor by saying that the system is failing. by citing the reasons. Maybe give couple of examples about, specific account number, that these are say 5 accounts wherein this is my observation. And then let that central auditor take a call. So your job will get over at the branch level and central auditors will job begin actually.
So
Which I know that, Vipul is, why is smiling at me, because that is the toughest job for the central auditor. The moment any branch auditor does that work, central auditor is going to have a tough time. Because once you understand that, what is wrong actually, he cannot run away from the fact that his work will start off from that point. So it's literally handing over the baton, that wherein you are proving that the system is failing and the central auditor picks it up actually.
So, like for example, in the current year itself, most of the banks are struggling with one issue, which is on fair lending practice. Basically, RBI circular had come in the last year, 29th April 2024, where RBI very clearly said that the interest which is there on the loans which are getting disbursed through DD and checks, you can charge the interest only from the date when you have handed over these checks or DD to the customer. That is a requirement of the circular which every bank has to comply. Now, most of the banks which at least I have seen and experienced, none of these guys have been able to capture the date of handover in the CBS system or in their loan management system. Currently, the interest is getting charged from the day when the DDs are created or the loan is created. Now, whether you will call this as affecting a true and fair view of the financial statement, because typically what is happening, you are not complying with the RBI circular, which requires you to charge the interest from the date when you have handed over the DD to the customer. So now, this is a more wider issue which we need to address, and if this is the issue in your bank, I'm sure it has an impact on your P&L, because currently the branch P&L accounts for the interest from the date when the DD is created and not from the day when the DD has been handed over to the customer. It will have an impact on your P&L statement also. If these kind of things are there, obviously it has two ramifications. One, your income numbers are not appropriately reflecting. Second, the bank at branch level has not complied with the RBI circular. So CBS system could be two things. One is a failure and one is a non-creation of additional fields or additional things which are required as per the RBI circular also.
Since we had the point of to's and fro's between the central and the branch auditor, one of the point that I would like to ask, can the central auditor maybe reject or account for modification of any MOCs which are suggested by the branch auditor?
Typically, the central auditors would, honor the MOC given by the professional colleagues who are the branch auditors. There may be a situation where, the branch bank management strongly feels that, this MOC is wrongly passed. But there are very, very few such cases, where the central auditor would reject the MOC given by the branch auditors. Generally, all the MOCs are accepted by the central auditor. There is no reason, unless, there is something which is wrongly done by the branch auditor by passing a wrong MOC. Then in that case, reversal may be, necessary. But otherwise, there is nothing like that. All the, and generally, where the accounts are sensitive and the branch auditor feel that there is something, to be discussed with the central auditor, they generally call the central auditors and discuss the issues also. And wherever required, the central auditor also support the branch auditors that yes, this is what you are doing is correct, and therefore the MOC needs to be passed. So to answer your question, MOCs are accepted generally with a few exceptions.
Coming to the point of MOC rejection, does branch auditor has a right to demand from central auditor if it is rejected, if the MOC is rejected? Reason for the rejection.
Actually, branch auditor's job get over at the point when he signs off the report. And there is nothing like accountability of central auditor to the branch auditor and vice versa also in the real sense.
Because you need to appreciate that if the central auditor also, as central auditor takes a call to drop that MOC, he also is owning a lot of professional responsibility. It's not that, he can drop the MOC. Because if a central auditor decides that this MOC needs to be dropped, he is owning the responsibility. So he will not do that unless he is 100% convinced that this MOC needs to be dropped. So basically, it will be communicated to the branch head that this MOC is reversed, and branch head, the branch auditor can be in touch with the branch head and he can learn from him. Yeah, because central auditors are not obliged to communicate to the branch auditor as such.
And I think that's where, Vipul bhai mentioned that whenever you have some typical issues where you think two views could be possible, you should ideally can discuss with the central stat auditor before you're issuing the kind of MOCs. Then the chances are remote that, it will get either reversed or dropped by the central stat auditor.
I will just add one point actually, slightly disagreeing with what he is saying. See, as a branch auditor, you have to take a call as a branch auditor. Consulting a central auditor is something which is not supposed to be done. Suppose you are having two views. Ultimately, you are the person who is going to sign the balance sheet. Balance sheet in the sense financials at the branch level. So you have to take the ultimate call. Communication with central auditor is something which might be one way, looking at it. But once you do that, actually, your job gets over. If he ignores that and tomorrow something goes wrong, actually, he is the one who is going to be a responsible person. So as a branch auditor, suppose I am a branch auditor, I will be never bothered about that. I will send a communication to a central auditor and I will forget about it. If he requires, he will call me back. But I will not expect a call back also from him. Unless he is disagreeing with me, probably. Or he wants to express some other views. And just to add practically, actually, for central auditor, it's not that easy to communicate back, in that prescribed time interval. So there are practical issues also. It's not that central auditors don't respond back. And, everyone has a different way to deal with communication received. So everyone may not even acknowledge it. They might have used it also. It's not that they are just, leaving it as it is. But there is a communication which you are sending it to central auditor. So that will be considered to be communication under SA 600. And he has to take, cognition of that and act upon that if he feels so. So that is his choice actually.
See, one more point, which I would like to add is that generally, all the banks are financially very, very strong. So they, when the bank itself feels that the account is, weak and it needs to be classified as NPA, they won't argue unless they strongly feel that the account is standard and still the auditor is insisting it to be classified as NPA, then they would argue. Otherwise, banks generally accept the, view of that is my personal experience. I may be wrong, but Pankaj and Dhananjay can add to what I'm saying. But this is what it is. And there are very, very few cases which come to central auditor that the branch auditors have given this MOC and you please reverse this MOC. There are very, very few cases, exceptional, and where there is a strong argument by the bank management. And as I said, the central auditor is owning a responsibility, so he won't do something which is technically incorrect.
Since we had a bit of discussion on the advances topic, one of the question on the deposits, since the branch might have thousands of deposits depending on the volume of the business. So is there a need to use any technical tools, especially in the area of interest calculation? As the panel highlighted, one of the issues where the interest was not getting credited to the depositors. So any key points or key risk areas that could be highlighted in the deposits verification?
See, I think in deposit, I can very, very straight away say that it is one of the area which we consider as a second tier area basically. Because 60-70% of the time is spent on the advances, NPA, etc., and you could have multiple issues. I mean, if you look at the penalty order of RBI, and I will request you all go through the penalty, some banks, not major, if you can go through the last week penalty orders on various banks, they have been always on the area which is related to deposit and nothing to do with the advances. You have a case of one of the bank in recent time where interest on senior citizen deposit schemes were paid at a normal rate rather than at a higher rate. So if you just look at all these areas, specifically the schemes which are having a different interest rate, just do a sample verification of those schemes, one only. Because all these interests run on these schemes are not done manually, they are done through a system. Second thing, so test of one could suffice. If it has been computed correctly, it be computed in all the loans also. Second, when it comes to with respect to whether the interest has been computed correctly across the all month, you can simply look at the trial balances of these branch. You will come to know what was the deposit level and what is the interest expense also. Now, as far as these MAB charges are concerned, the minimum account balances charges, I think you have a reporting in the LFA are